Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Saturday, the 27th of August, and it is about 8:23 a.m. here in Northern California. Yesterday was a crazy day, was it not? All kinds of volatility and chaos in the market due to the Fed chairman's speech yesterday, and somewhat of a bleak prognosis for the coming days, perhaps another substantial interest rate hike. There's going to be more volatility going into the fall and in the economy and the stock market and so forth. And there's a lot of pessimism in the market right now. Everything's red. We've got these big red candles here on the Bitcoin chart. We're going to take a look at the market, and the question we're going to ask is, are we going to see any type of trend reversal, or will the bearish trend continue? And if the bearish trend continues, how low can it go? Where can we expect to find some support? What would that look like? What are the indicators? So I'm going to tell you exactly what I think is happening here. And I'm going to actually start with Ethereum because I've been really interested in Ethereum, especially since Ethereum 2.0 is coming out next month. There's a lot of anticipation around it. It could be strongly bullish for Ethereum. But I think from a macro perspective, if I start with this weekly chart, Ethereum is in a clear downtrend on the weekly. Okay, this is the macro trend. And in actuality, that macro trend goes all the way back to November of 2021. That's where Ethereum topped out at about $4,800. And it's been in a clear downtrend ever since. And the downtrend is not over. So Ethereum is not out of its downtrend until it breaks above this line of resistance. Now we're clearly above the 200-week moving average, but the downtrend, we're beneath the 100, above the 200, and we're consolidating there. But the downtrend is not over, and in fact, if you follow this downtrend, we could come all the way down to, if we come down to touch this line again, it'll be somewhere around $600 before we get another good bounce. And it could be lower. Now, I think it'll bounce before that, honestly. But nothing is impossible. What I think is happening on the macro is that the bears want to tank, the big money really wants to tank Ethereum leading into the announcement of Ethereum 2.0 so that it can buy the crap out of it at a lower level. And so perhaps at least a double bottom here, dipping beneath $1,000 again. So that's kind of the macro mentality. However, on the micro, if we zoom in a bit, we're actually in an uptrend here, right? And the question is, will this uptrend continue, or will we break down out of the uptrend and go back into a downtrend right now? I know we've had a micro downtrend here, but we still made a higher low from July 26th. So there's two basic kinds of divergence. You know, I major in looking at convergence and divergence between the price and the RSI. That's my primary methodology. And there's two different kinds of divergence. The first is classic divergence, and the second is hidden divergence. So there's classic bearish divergence, and there's hidden bearish divergence. There's classic bullish divergence, and there's hidden bullish divergence. Now, divergence is whenever the RSI does something different than the price. And what we're looking at is either the highs or the lows. So the lows of the price and the lows of the RSI, if they're doing something different, if they are divergent, well, that indicates something. That's a form of divergence. So divergences indicate either trend continuation or trend reversal. Now, classic divergences tend to indicate trend reversals. Hidden divergences tend to indicate trend continuations. Okay? That's an important concept. Now, on the daily chart, the trend is still bullish. As long as we have a higher low, and we were making higher highs here, as long as we have a higher low, the trend is still bullish. The bullish trend is broken when we make a lower low. So I'm going to draw a line here and say this, if we go beneath this line here at 1,358, that completely invalidates the bullish trend. The bullish trend is over. I'll make this a dotted line because I think this is a line of support. But the bullish trend is broken if we break beneath 1358. Okay? So if we puncture that number, we're not in a bullish trend anymore. But if we bounce anywhere before that, we're still in a bullish trend. Okay? On the daily, what I'm seeing is we've still made a higher low, while simultaneously on the RSI, we've made a lower low. You see that? So if you zoom out on the trend on the daily, we've got hidden bullish divergence, and we've got strong hidden bullish divergence, which indicates trend continuation. It's an indicator. Now, these indicators are not omnipotent. They're not omniscient. They're not infallible. Sometimes they work, sometimes they don't. And as we all know, everything depends on Bitcoin, right? I mean, if Bitcoin suddenly crashes, despite the hidden bullish divergence that we see on this chart, Ethereum's going to crash. And once again, once we get under 1358, it invalidates this bullish hypothesis. But for right now, what I'm seeing on this daily chart is that this hidden bullish divergence indicates a possible continuation of the bullish trend. And so what I think is we're going to get a bounce. Now, at what point are we going to get a bounce? I don't know. I just think we're going to get it somewhere before 1358. That bounce should take us all the way up to 1956. And I think we're going to hit resistance there and get rejected. Why do I think that? If we go to this weekly chart, that's where the resistance is at the top of this line. If it happens this week, it's 1950. If it happens next week, it's a little lower. It's about 1872. So on the weekly chart, even a bounce and run all the way up to about $1,900 on the weekly chart is nothing. It's still in this downtrend. Now, once again, if we break above this line on the weekly chart, that will invalidate the downtrend. And that will indicate the beginning of a new trend. So notice we're not seeing hidden bullish divergence on the weekly chart. We're seeing convergence between what the RSI is doing and what the price is doing, which means on the macro, we're still bearish. But if we zoom into the daily, we're potentially still bullish. And if we're going to bounce here, this is an excellent time to enter a long trade, to enter into a long position, which I have done. And so I know the market's shaky. I know if you look at the fundamentals, it's a shaky time in the market. You don't want to take any risks. But this is a measured risk for me. This is a measured risk. And so that's what I see. Now, if you look at the Bitcoin chart on the daily, we're seeing the same thing. Look at this. This is the daily Bitcoin chart. We were making a higher low in the price and lower lows in the RSI. That is hidden bullish divergence, which means that even on the Bitcoin chart is telegraphing a bounce. To me, this is the simplest and most effective way to look at the chart. Because if I look at Fibonacci levels, it can get really confusing. And it can leave me, simply wondering what's going to happen next. But when you see strong hidden bullish divergence on the chart, it tells me that there's a good chance. And when I say a good chance, more than 60%, probably about 67% chance that we're going to get a solid bounce. And if we get a solid bounce here in Ethereum, we should come back to retest the top of this line before we get rejected again and continue this downtrend. I think for Ethereum, we have a good chance of hitting support here. Even if the downtrend continues, we have a really good chance of hitting support here at the 200-week moving average. And that should lead us into the announcement in a couple of weeks of Ethereum 2.0. In other news on the market, I wanted to take a look at, first of all, Theta. Yeah, there's hidden bullish divergence. Yeah, I'm going to get rid of this because that's a couple days old. But we're also seeing the hidden bullish divergence on the Theta chart. Notice how lower low in the RSI, higher low in the price. And so we're seeing that. T-Fuel is doing it's doing its own thing. I mean, well, T-Fuel had a nice solid breakout here. I mean, if you look at this breakout here for T-Fuel, it was like 88%. But it's solidly within the trend here, even though the RSI is broken down. But I wanted to look at, Chili's. We'll take a look at Chili's for a second. Chili's it's got a mind of its own. It's doing its own thing. I mean, it's one of the only assets I found that's actually broken above its trend. And if this line remains support, it's heading to 48 cents. And at current, it's up 169% from its bottom, which is crazy, awesome. But I want to look at T-Drop, okay? A lot of folks in the Theta community are really interested in T-Drop. Now, first thing I'll say is T-Drop reminds me a lot of what T-Fuel was like. Remember when T-Fuel was less than a penny? You know, I remember looking at T-Fuel and it was 0.008 cents, 0.008, like 0.8 of a cent, and thinking I'll buy it later. I finally bought it at a penny, which was great. Took some profit at the top, which was great. But here's what I'm seeing with T-Drop. We've made a higher high in the RSI, lower high in the price. This is classic bearish divergence, which indicates a local high and then a downtrend. Secondly, we've got an ascending broadening wedge in the RSI, which tends to be bearish. And we've got an ascending channel in the price, which tends to be bearish as well. So we could see some more downtrending. We could break beneath this line, come back and revisit the bottom here for T-Drop before it bounces. So if, what I would do is I would probably just dollar cost average in, because you also never know. Like, it's still in the long run a tremendous price to get T-Drop. It could bounce at this line and move up towards the top. And I mean, this is like, if you look at this, if it touches this line and comes to the top, you're talking about 119%, and that's still within the trend. But best case scenario, it comes back to revisit the bottom, which is about a 42% drop. And then we get a strong breakout, and that's about 240%. So my plan is just to dollar cost average into it and see what it does. And then Bitcoin Cash. Bitcoin Cash is just in a triangle. We're watching to see the break of this triangle. If the scenario of hidden bullish divergence plays out and we get a bounce in the market, then we'll get a bounce here. And what we could see is if we get this run with Ethereum and Bitcoin, as I'm anticipating, if Ethereum breaks out and heads to this line, where could we see Bitcoin break out and head to? We could see Bitcoin head up towards, $26,000, something like that. And if that happens, Bitcoin Cash should break above the triangle and head towards about $164. That's best case scenario. But if the market breaks down and the hidden bullish divergence scenario does not play out, we could break down and come back and revisit 95%. Watch the break of the triangle. All right, folks, that's all I got for you today. Remember, this is not financial advice. I'm not a financial advisor. I'm not telling you what to buy, what not to buy, how to buy it, where to buy it, when to buy it. I'm just telling you what I see in these charts. Thanks so much for listening. Do me a favor and hit that like button. Subscribe to this channel if you haven't done so already. Leave me a comment letting me know what you think. And above all, make it your aim to sleep in peace, wake in joy, and walk in love. This is Cryptogenic, signing out.